So let me just start off by saying good morning. I can't believe we're in 2024. I'm Sherry Porter, Senior Vice President and General Sales Manager with Berkshire Hathaway HomeServices EW Realty. It's great to be together, even if it's online. And I'd love to welcome everybody who's listening in, and certainly anybody who's joining us as a guest. Thanking you very much for taking time out of your schedule. I'll be hosting our time together as Ron Shuffield, President and CEO, provides us with a 2024 real estate market outlook. And as you know, Sid, you just were saying, Ron is our go-to source for the latest in real estate. And his comments on the South Florida real estate market have been featured in the Wall Street Journal, New York Times, Forbes, CNBC, the Miami Herald, and I could go on and on. And I always look forward to listening in and gaining insights from Ron about what's going on in our market. So we're going to be unpacking a lot of information. So you may want to have a notepad and a pen handy. We'll be recording this session and sending it back out, probably, if not this afternoon, tomorrow. And we'll also make the PowerPoint available to everyone. But some of the topics Ron's going to be touching on is the market's performance in 2023, the potential for inventory growth, the anticipated influence of mortgage rates, along with a glimpse in what we can expect into 2024. So should you have any questions, put them in the chat. We'll be looking at those and offering them up. Ron is going to be keeping his presentation to 45 minutes to an hour possibly, and we'll do Q&A certainly along the way and at the end. So are you guys ready? Because I know I am. Ron, I'm going to turn it over to you.
Okay, thank you, Sherry. We have a lot to talk about this morning, so I'll try to talk very fast. And as Sherry said, we'll have some time for questions at the end. So just jot down your questions as we're going through this. We learn from each other. So as I tell you all the time, everything I know about this business, I've learned from you because you're the ones on the street coming back with fresh information. Okay, January 2024, market update. Whoever thought we would be in 2024? So I moved to this next screen. I love this picture. This is a new picture that is kind of new on the market today. Somebody took this just a couple of months ago. This, if you don't recognize this, you probably know where the Mandarin Oriental Hotel is on Brickell Key. This was probably taken from the Mandarin Oriental, looking across the Brickell Bridge back into Brickell Avenue. Those four buildings in the foreground, those they look so short. They're 20-story buildings. Those were the first four, at the time, high rises back in the mid-70s. Avenue. All those other buildings have been built, basically since 1975. So when you think about what that has meant to our economy, what that has meant to the number of people that are living here today, this area of Miami has created a destination for the whole world, not just for Miami, but for the whole southeastern seaboard. We talk all the time about Miami being the brand, but the brand includes a lot of South Florida, all the way to Palm Beach. So when people think of Miami today, they think of Fort Lauderdale, they think of Palm Beach. But this area will always be known as kind of the epicenter of where the financial district is located. Just to the left of these buildings, you can't see it in this photo, but Ken Griffin just purchased 2.5 acres for $363 million. Pretty amazing when you think about what that means. On Brickell Key is a 44-acre island. Now, again, this picture is taken from Brickell Key, looking back to Brickell Avenue. Brickell Key was sold to Swire in 1979. The first 33 acres of the 44 acres is what they purchased in their first transaction. Then they bought the rest of it later. But in 1979, for 33 acres, Swire paid $17 million. Now, Ken Griffin just paid $145 million an acre for what he just bought at 2.5 acres, $363 million. And that's just across the water. You could swim over there. And when you look at the fact that the original land on Brickell Key sold for $500,000 an acre, and he just paid $145 million an acre, and that all happened basically in the last 40 years. So or 50 years, I guess, almost 50 years. When you look at at those kind of numbers, people ask me all the time, well, how much will condos be selling for in another 20 or 30 or 40 years? Well, if history is any guide, it's going to be selling for a lot. And of course, what we're dealing with today that we didn't have to deal with back in the mid 70s is that we have very little land left to build anything other than high rises. And so these buildings are going to get taller and taller and taller. And again, I gave a reference point of the Mandarin Oriental Hotel being where this photo was probably taken from. The Mandarin, if you have not heard, which was built in 2000, is getting ready. They're getting ready to tear the building down. It's only been there since 2000, so it has not even been there 24 years yet. But they recognize the financial opportunity to build 2 new towers. So there will be a new Mandarin Oriental Hotel, obviously 5-star hotel with 151 rooms, along with an 80-story plus or minus condominium tower to go with it. So many of our condominiums today are tethered to hotels, whether it's the Ritz-Carlton or whether it's the Four Seasons. And now the Mandarin Oriental will have its own tower adjacent to the hotel. So this is where we will continue to go. Many of you have seen the new 395 bridge, all the construction that's going on there. It's going to be an artistic bridge with arches, high arches, 6 high arches, multicolored changing lights, through the day and night. It'll become a really iconic place to take pictures. You'll see also the new 100-story Waldorf Astoria hotel and condominiums on Biscayne Boulevard across from Bayside. So the downtown skyline you didn't think it could change anymore, but it will continue to have new and exciting buildings and photo opportunities for the world to remember us by. So this picture, I've spent a lot of time talking about this one picture, but this is what Miami, this is the view Miami has to the rest of the world. And of course, we're all fortunate to live not only in this area, but also Fort Lauderdale, Palm Beach, all the beaches, all the businesses that are filling into these buildings now. When I moved here in 1975, Miami was still a pretty much sleepy southern town. And today it's an iconic city that everybody wants to have a stake in. And now corporate America has discovered it. Jeff Bezos, as we all know, is moving his Amazon office here. Ken Griffin, who is a billionaire, supposedly worth about $35 billion, is moving his company Citadel here from Chicago. So all of these buildings now will be filled with major corporations, many of them based in the financial industry. Next picture, next slide. We've looked at this before. This is updated now to January of each one of these years. Now, interest rates will be the thing we remember about 2022 and 23. I think we're going to remember 24 is the year that we continued our growth. Sales last year, if you look at the MLS data, sales last year were the lowest sales we had as an industry since 2010. So now here we are in 2023. So in 13 years, this was the lowest number of sales that we made as an industry. I know that y'all all know that because we've all kind of been dealing with that with our buyers looking for more product. Our inventory is the lowest it's been also in that same period of time. But just to kind of put a number to that, last year, single family homes in Dade County, and again, these numbers, I'm not going to go through each county on some of these numbers, but each county looks very similar. If you look at the graphs that we're going to see here in a second for Dade County, you can basically use the very same graphs for Palm Beach and for Broward County. But last year, we sold 11,115 single-family homes in Miami-Dade County. In 2021, just 2 years ago, which was the peak, we sold 16,601. So we sold 33% fewer single-family homes in Dade County last year than we did just 2 years ago. And again, we all know what happened with COVID in 2020, and then the run-up of sales across the nation in 21, the total realignment of our population, which we'll see here in a second too, across the nation. Condominiums were even more dramatic. Last year in condominiums, we sold 14,566 condos through the MLS in Miami-Dade County. In 2021, the number was over 25,000. So the condominiums last year in 2023 sold 43% fewer condominiums than we did just 2 years ago. The reason I'm telling you about all these sales is because these interest rates here had a huge impact on that. So if you look now at the bottom of this chart or this graph, January of 1974, we had an interest rate of about 8.5%. And then by the time we got to 1979-80, the interest rates all shot up above 10% and stayed that way for a full decade. So when we get concerned about the interest rates being back into that 6% range, this graph will help all of us feel better, buyers and sellers, and buyers in particular, feel better that these rates have continued to come down, but now they're coming back up again. So as you see over in the green bars, that's the period when all of our rates were below 5%. And that extended from 2008 all the way up to 2023. So that's about 15 years we had really, really low rates. And now those two bars on the right, the blue bars show how we're back up into that 6.5% range, which is where most economists think we'll probably land here for a while, in the 5 to 6% range. We anticipate that this will probably come down a little bit more. This graph, you're going to have all these graphs tomorrow, so you can make copies of each page. You can send them out to your buyers and sellers, so everyone can see that where we are today is not a lot different than where we have been historically, but it's a lot better. I don't want to go back through that 1980 period for a whole decade when the interest rates were above 10%. Okay, this now you've seen before too. This graph shows us the impact on the rates moving up from 3% where we were prior to 2 years ago. If you look at the very top of that chart there, you'll see November the 10th in 2021, the average mortgage rate across the country was 2.98%. And then by January of 22, it had risen to 3.22, March of 22, 4%, April 5%, September 6%, October 7%. And then we saw things begin to kind of level back a little bit in February of last year at 6%. And then in October, it actually spiked up to 7.79%. But now in January, just last week, the average mortgage rate across the nation is 6.6%. So today, you're looking probably at about a 6.5% mortgage rate, which is right there in the middle. You see the red box around that. But what this graph is reflecting is that, yes, it's higher, quite a bit higher than it was just 2 years ago when the rates were at 3%. So if you had a mortgage at 3% in late 2021, your payment would have been $4,216 a month. And then as you move across that interest rate, the boxes at the top, as the interest rate increases, you have a 6.5% rate. Is where we are today. The mortgage payment is about 50%. It is 50% higher than it would have been at 3%. Many people cannot afford to just raise their mortgage by 50%. So they say, well, okay, I can borrow enough to pay $4,200 a month. And so this graph very easily reflects the fact that those rates are the amount of money you can borrow has been impacted by about a third. So instead of being able to borrow $1 million at 3%, at 6.5%, you can only borrow $667,000. But the good news in this chart, which is not reflected in these red lines, but the rates had gotten up to about 8%. So now your payment has really dropped back from $7,300 a month to $6,300 a month. So you're saving somewhere on $1 million mortgage, saving somewhere between $800 to $1,000 a month. So if you're saving $1,000 a month, that's $12,000 a year, times 30 years. You're saving over $300,000 from what you would have paid just 3 months ago when the rate in October was 7.79%. So if you have some questions about that, jot them down and we can talk about that in a minute. Okay, this is the tax factor. We've talked about this a lot. I think we're all very familiar with this. Those green states are the 8 states in the nation now that have no state income tax. The ones that always pop out to you are New York and California, where higher income earners are paying 13% plus percent of their income in additional tax, in addition to the federal tax. So these green states, as you'll see in some other graphs here in a second, this graph right here, those states that do not have a tax are the states that have a grid line across them. You see Texas, large states standing out there at the bottom. You know, that is a tax-free state also. They're growing at the rate of 1,297 new residents per day. And then in Florida, we're still growing at the rate of 1,000 people per day. And those other green states are also growing. In Georgia, for instance, 318 a day, South Carolina 248 a day, North Carolina 382 a day. The blue states are the states losing population. New York is losing 279 people a day. California is losing 207 people a day. So those blue states, there are only 8 of them this year. Last year there were 18 of them. So we have reduced the number of states that were losing population this past year. But those blue states, especially in the Northeast, it's pretty simple to see that a lot of the Northeasterners are pouring into the South. You know, it's not just Florida that's benefiting, but it's Tennessee and Georgia and the Carolinas and Alabama and all of those states. So again, this is a very compelling graph when we see where people are coming from and where they're going to. And again, Texas and Florida are the big winners here because of a lot of reasons, but because of no taxes being one of the main reasons. Okay, so exchange rate, our international buyer is coming back. You know, during COVID, we lost a lot of our international buyers. They couldn't get on an airplane, they couldn't come here. But these graphs show the currency exchange differences in the US dollar and these various other currencies. Argentina, many of you are from Argentina. Certainly, we all have a lot of Argentine friends here in Miami and all across South Florida. And as you see, they've had a really, really tough time with inflation and what's happening with their economy. The exchange rate there has made it 357% more expensive to buy property here this year. You know, you see very few countries there where it's less expensive, but you know, Colombia is, you know, actually their currency against the US dollar makes it 20% less expensive to buy here today. Same thing for Brazil and Mexico and the UK. So this is a pretty balanced graph other than what you see there in Argentina and of course Russia. We all know what's happening there. Okay, so this graph is my favorite graph of all the graphs that we have to look at because this clearly shows what happens when the inventory is in balance. You know, when you look at the left part of this graph in 2008, that's the last bar. Each one of these bars is a quarter. So it's 3 months. So that's October, November, December, and 08. So in 08, we had 2 years of supply. This was actually coming down at this point from the recession. So if we went back into 07 and early 08, the months of supply would even be higher. You know, the months of supply is the #1 metric in our business. It tells us whether prices are going to be going up or coming down based on the amount of inventory we have. We need to keep 6 to 9 months of inventory for a balanced market. We've drawn a line across the bottom there to show the 6-month mark. And as you see, when we were back in 2009 and 10, we were well above that 6 months of inventory. And when we were out at 2 years of supply, it just created an opportunity for prices to continue to tumble. And they tumbled all the way down until January of 2011. The median price of a single family home in Dade County was $150,000. And of course, as the inventory began to be depleted and we got down into the 4 months and, you know, in 2012, 2013, as you see, the consumer, the buyer started rebuilding their confidence to get their sale to make purchases, and so sales prices began to increase. So you had a nice steady increase going up toward December of 2019, when the median price was $380,000, and then in 2020, of course, is when COVID came, and you see how quickly the curve there increased dramatically up to where we are today. In December of 23, the median price of a house in Miami-Dade County was $615,000. So we have gone from 2011 to 2023, 12 years, and it says there at the top, we've increased values of a home. Median price of a home has increased 310% during that period, from 150,000 to 615,000. So again, this is a great graph, to show our sellers in particular and buyers, more particularly, I guess, that, I tell everybody, just get in the game. If you're a young buyer, don't rent forever. It's fine to rent for some periods, and even, when you're making transitions in jobs and moving to different cities, there are always reasons to rent. But as you look back through history, the people that have benefited the most economically are the ones who have owned their home versus renting. And as you see here, in the last 12 years, if you had owned a home, there was a median price of $150,000. That home today would be worth $615,000. But then down at the bottom, you see where we have written COVID shutdown March of 2020, and it's just not. It's not ironic that just happened, as a coincidence. When COVID changed the way the world viewed its housing, we started selling off all of our housing until our inventory there, as you see, dropped below 2 months of inventory from all of 21. That's when we gained the most value. And now the inventory is building again. We started building inventory toward the end of 22, and then we started selling it off again in 23, and now we're building it again. I think that we're starting off January very strong. I mean, our pending sales as an industry, I believe by the end of January, are going to be very positive, which will keep pressure on pricing to remain high. But we do have some price points, some neighborhoods where we have actually seen some drop of pricing. This next slide are condominiums. So very similar looking graph, but the inventories you see was a lot higher before COVID, and then it dropped dramatically also as we started selling condos through COVID. And of course, now we're building many, many new condominium projects across South Florida. And the median price here is increased from 92,000 back in January of 11 to 415,000 today, representing a 350% increase in the median price of a condo across Miami-Dade. Okay. Here I put this one picture in here just to show what's happening with development. These new developments, we have many new developments that are being sold, but this one in particular, and our company has sold quite a few units in here, 360 condos. They're down to about their last 15 or 20% of their units to sell. It's just started construction. They just broke ground. So it'll be probably a couple of years here before this is being lived in, but this is going to be 100 stories. That building sits on 1 acre of land right across from Bayside on Biscayne Boulevard and 3rd Street. So this again will be one of those iconic pictures that people will remember about Miami. And I think that we will continue to see more and more people living in a multifamily setting versus a single family home, not only because the number of units will be able to grow faster because you can go as high as you want in the sky versus having more, or trying to find more vacant land to build single family homes. Single family homes are certainly not losing any value. Quite the contrary, every single family home that's in South Florida is becoming a collector's item. Okay, the overall market. Now we're going to look at some numbers, and I want to kind of try to go through these. You get the kind of gist, you already know how these graphs work, but I wanted to leave some time for questions, and then also you'll have all these graphs that you can download either later today or tomorrow and send out to your sphere of influence so people can see where they fit into all these numbers as well. But every one of these segments here, Miami-Dade County, single family, off to the left, those 4 boxes, they quickly show that our inventory over this last quarter, the fourth quarter of 23 versus the fourth quarter of 22, inventory dropped 3%. So we're at the lowest level we've been in a long time, 3,991 properties on the market. And again, to put that in perspective, these numbers, back into the 2010 period, we had for single family homes, we had 21,000 homes excuse me, we had 5,400, 6,000. This is all during that period of 10, 12, 13. Today we're at very low inventory still, so it's a great time for sellers to be buying, but we are seeing an increase in inventory in January. So these numbers are going to start to reflect some increases. But from what we looked at in the fourth quarter last year, 3% decrease in inventory. Sales were also down by 1%, mostly because we didn't have enough inventory. We had many buyers, but the sales were down because we didn't have enough inventory to sell. The supply has moved up slightly from 5 months to 5.1 months of supply. We would like for that supply number to be 6 to 9 months. The median price, though, because there's such a limited amount of inventory, and we still have a lot of buyers wanting to buy, the median price has increased 12% from $555,000 a year ago to $620,000 today. And then in Broward County, very similar. Their inventory is actually up a little bit. 3,517 homes, very close to Miami's 3,900 homes. Sales are down 3%, again, reflecting more of the fact that we didn't have enough inventory. Supply is only at 3.9 months. Again, Miami was at 5.1 months, or Dade County was at 5.1 months. The median price there is up 8% from $540,000 to $583,000. And then in Palm Beach, their inventory is growing, better than the other two, but still very low, 4,000 homes on the market. So all three counties have 3,500 to 4,000 homes on the market, 3,500 in Broward, and then 4,000 basically in Miami and Palm Beach, or Miami-Dade and Palm Beach. And then total sales in Palm Beach are down because the inventory is low. Supply is still at 4.6 for 6 months, which is 15% increase, but still very slight. And the median price is up 10%. So I think that what most buyers are looking at is the median price. And then Dade County, it was up 12%, Broward County up 8%, and Palm Beach County 10%. So again, this one graph for the whole market gives everybody a very good grasp of where we've been for this last year. And where we're going for this next several months is going to continue probably to look similar, but as the inventory grows, prices will begin to level off. In fact, I'm going to go back over here just to show. You see how in the condos, how off to the right there, the shaded areas, the period of the rising interest rates. And you see where we had this sharp increase starting in 2019 and then 20 and 21. And then in 22, things started to kind of level off. So you got prices kind of bouncing around a little bit there. And then if you go back to single family homes, it's a very similar looking graph there too. Maybe not leveling off quite as much as condos in this graph, but that's what we need to be watching, because we're not seeing that sharp increase in prices like we had in these last 2 years. And with interest rates beginning to come down, that will help us to get a better balance again, or get a better footing again. But you're going to see, these negative inventory numbers not for much longer. I think we're in Palm Beach, we're already seeing an increase in inventory, but we're going to start to see it in Miami-Dade and Broward as well. Okay, now this is the overall market for condominiums. Inventory is up 19% in Dade County. Sales are down 10%. Median price up 7%. In Broward County, inventory is up 53%. And Palm Beach County is up 43%. So look at the difference in these condos where inventory is up 19%, 53%, and 43%, versus going back again, single family inventory was down 3%, basically flat at 0.9%, and inventory is going up in Palm Beach.
Ron?
Yes?
There was a question about, would you mind just going over the difference between inventory and supply? If that would be helpful.
Okay, well, we're looking at the condominium graph right now. The inventory is just the static number of properties on the market. So the inventory in this graph we're looking at now, inventory in Miami-Dade County up 19%. At the end of last year, December the 31st, inventory was 8,148 condominiums for sale in Miami-Dade County versus 6,829 the year before. When we're talking about supply, we're talking about just a months of supply remaining. So if you think about, if we had 100 properties on the market and we're selling 10 per month, So we simply divide how many we're selling per month into the total inventory. So 10 into 100 would be a 10-month supply. And of course, in this case, we are dividing the number of sales, which we know on the column to the right there, we had 3,170 sales that quarter, and we had 8,000 homes on the market. And so if we were exhausting that inventory, we just took a snapshot and said, okay, we're going to exhaust this inventory of 8,148 homes. How many months of inventory would we have remaining? So that would be 7.9 months. And again, when we're looking at these sales of 3,170, that's for the whole quarter. That's 3 months. So we basically are selling 1,000 a month. So you can kind of in your head do the math. If you have 8,000 in the market, you're selling 1,000 a month. And if you took a snapshot to exhaust that inventory, that would give you about 8 months of supply, which is what that shows down below, 7.9 months. So hopefully that answers that. So if you can chat back into Sherry and tell her if you need more on that, we can go back and talk some more about that. But what you're starting to see again here for all price ranges, condominiums, significant increases in inventory in Broward County, 53%, Palm Beach County, 43%. Dade County, a lot of the numbers don't show here that are under construction because a lot of that new product that's being pre-sold, pre-construction, those sales are going to start to show up in our numbers, but not necessarily our MLS numbers, because not all of those units get listed in the MLS. So all these graphs though don't scare me at all, because the inventory is still very low. 7.9 months. I mean, we're kind of right in the range where we need to be for condominiums now, 6 to 9 months. If you look at the supply range for Broward County at 5.9 months, we're at the low end of where we'd like to be. Same thing for Palm Beach County, 5.5 months. Now, as we get a little higher price, we're going to see some of these months of supply really growing. And when they grow beyond that 6 to 9 months for the overall market, 12 to 18 months for the over $1 million market, once they start getting above those balances, then we'll start to see prices soften and eventually decrease. Okay, so this is the under $1 million market. This market is so challenged because we just don't have enough inventory. And we never will. I mean, these are properties under $1 million. As you see, the median price for under $1 million property in Miami-Dade County was $560,000, Broward County $538,000. And of course, what we mean by median is that half of the homes are selling in the under $1 million market, half of them are selling for more than $560,000, half are selling for less than $560,000. And as you look at Palm Beach County, it's $571,000. So increases in value in all of these categories. And then the under $1 million market for condominiums, again, median price in every one of these categories is up. So we made it easy to just pick out the red bars and the green bars. Obviously, the greens are going up and the reds are coming down. And then you have some where sales are flat. So we've labeled those as gray. Okay, the over $1 million market. Now, this is where things start to look a little different. In Palm Beach County, the median price of an over $1 million single-family home has actually dropped by 7%. Again, this is just one quarter we're looking at, but this is an effect of the supply beginning to move higher. And you see in Dade County, single-family homes in the over $1 million market, our supply is now 11.6 months. So we're, and we know that in the over $1 million market, we feel comfortable with 12 to 18 months of inventory. And Broward County, we're still below that at 8.9 months. In Palm Beach County, we're at 9.6 months. But as we get higher in these prices, you'll see those months of supply growing, and that does start to affect price. And of course, in Palm Beach, we're already seeing the median price dropping a little. Okay, this is the over $1 million market for condominiums. The supply in Dade County, $1 million over condominiums is up to 19.4 months. I think that we probably need to, watch that carefully, because we're adding a lot of new condominiums that are new construction that'll start closing here in another year or so, and that'll add a lot more inventory, which an increase in inventory affects the months of supply. everything I'm saying would tell me if I was a condo owner today, it probably is a good time to think about putting it on the market and selling it, because we are going to have a lot more competition in condominiums over the months ahead, especially in the more expensive condos, because that's where most of our condos, have landed in value now. All right.
Ron,
Yes.
another question that came in, do you see a trend between with buyers having a preference of a different county other than just Miami-Dade? I know you're talking about Broward and Palm Beach here too.
I really don't. I think that certainly there are preferences. Everybody has preferences, but there are enough buyers with different reasons for why they're buying to still have a very vibrant market in all three of these counties. We do have some people that if they're only interested in waterfront, they may, if they're not tethered to one county because of a job, and they just want to, if it's especially second home people, they will look in all three counties for what feels the best to them for their lifestyle.
Well,
But
another question also that just sort of came in is insurance, which I know is a big concern from a lot of buyers now. And how do you think it's or do you see a different effect on the condo market versus the single family home?
Well, it affects both. I mean, single family homes and condos, get they get saddled with that challenge, because in condos the numbers are just much bigger, because you're talking about swings of $500,000 in some cases for huge buildings. Single family homes, it can increase significantly also, but as I've watched these rates through the years, they ebb and flow. Our state legislature is finally taking some action. I mean, that's a hard thing for them to take action, but the state steps in from time to time to take some of that responsibility. I know after Hurricane Katrina and Wilma and Rita that we had in 2005, we had all three of those hurricanes back to back in a 65-day period. It really impacted insurance. So the state had to step in to serve as a reinsurance provider. And Berkshire Hathaway even stepped in behind the state to prop up the state in case they got into financial trouble. So, Warren Buffett, wrote a policy for the state of Florida during that period that basically gave the state extra financial strength during that period in case we had storms the next year, which we didn't for many years after that. So, we breezed through, no pun intended, we breezed through that period. But I think that insurance will continue to be a concern for a lot of people, but it's also now concerning a lot of people in places that have never really thought too much about their insurance rates in the Midwest and other places where they have flooding and tornadoes and other things. So yes, I'm concerned about it, but it's just going to be a part of housing cost. It certainly affects the underlying value of housing, just like a homeowner's fee does, like taxes do. In condominiums, especially where they have a higher level of amenities in their buildings and salary costs and so forth, that will affect value if the homeowners association does not manage that well, and their fees get out of line with what other condominiums are charging. Most of our well-run condominiums today are somewhere around $1 plus a square foot now, which seemed very high. And for a long time, we were at 60, 70 cents a square foot per month as a homeowner fee. But now that buildings are getting older, with the recertification of buildings that are 30, 40, 50 years old, that adds additional costs there too. But insurance is just one of those pieces. All right, anything else, Sherry, before I move on?
Nope, that's all that's come in so far.
All right, now we're going to look at this by price segment. I love all these pictures. I mean, to kind of point out there's the Mandarin Oriental. You see the Mandarin sitting right there. Can everybody see my graph there, Sherry, I guess, or my cursor? That building was built in 2000, and now they're tearing it down because you can now build two 80-story towers there, basically. I mean, 800 feet is what will be built in place of that one original Mandarin Oriental Hotel. This property or is the property that Ken Griffin just bought? It's right in here somewhere in this stretch where he paid $363 million for 2 acres. So everybody wants to be on the water. Of course, this is the Four Seasons, this tall building here. You have a lot of other wonderful buildings that are under construction. Una's down the street here on Brickell. You have other buildings on the main part of Miami. This the Waldorf Astoria will be right in this area here. So I could look at these pictures all day. Okay, here we go.
Ron, I'm sorry, you opened up the conversation about condos, and the question came in about, do you foresee an influx of older condos coming into the market due to recertification, and the older folks that live in many of these units that will not be able to afford the assessments that will happen because of the new laws in place? And then a second question was about the Mandarin, and when did we have an idea when that was going to be demolished?
Soon. Yeah, I haven't heard exactly when, but you know, Swire, incidentally, the Swire Corporation out of Hong Kong, we are so fortunate to have them as a community partner here. You know, what they have done for this community, I mean, obviously Brickell Key is a wonderful place, but it has been a catalyst for so many other things to happen in the downtown area. You know, the Brickell City Center, you probably all know, is owned by Swire. And when they announced a few years ago that they were going to build Brickell City Center, it increased the value of every condominium in the Brickell area by a minimum of 10%, just in one press announcement. So when they say they're going to do something, it happens. And so they've made this announcement now a few months ago. So I haven't talked with anyone there recently to know, you know, what their timeline is. You know, I'm assuming that we're probably a good 3 years away from people living there, just knowing how long it takes to permit and get something built today. But I think, you know, back to the question that someone had about insurance, yes, that's on all of our minds. You know, you'd be surprised how many people have decided to waive wind coverage if they do not have a mortgage. You know, with the high deductibles and the higher cost, obviously, of having a wind policy, I think we'd probably all be surprised how many people are sitting bare, as they refer to it, without coverage for wind. But I guess we'll kind of see how storms develop over the course of 2024. But for now, you know, we're just continuing to move forward. Plenty of buyers coming from every direction, you know, to buy the new product that's being pre-sold. We have many buildings now throughout South Florida that they're pre-selling and have now started construction. But all of those processes take, you know, 5, 6, 7 years from the beginning of a developer buying the land, you know, getting the right to build what they want to build, getting the permits, you know, issued, building the product, and then, you know, having everyone move in. So I do think we're going to see we are seeing a higher percentage of owner occupants in these buildings. You know, Brickell for many years, many of the buildings only had about 10% owner occupants. So 90% were either second homes owners, and well, those would be owner occupants, but without homestead. I mean, if you look at the homestead filings for so many buildings in Miami, there's still many buildings where only 10-15% of the units are actually being lived in with a homestead exemption. So I think that's changing. A lot of the new sales that we're making today, especially young people, are buying their first home, and that's going to change the look of a lot of these buildings. You know, when you have a lot of owners living in a building, they're just maintained better. I mean, the owners, you know, take care of their own property better than they take care of a rental property. Not to say that many of our rental properties, you know, are not very nice too, but I think that there's just a total different attitude in the building where majority of the building is owned, is lived in by their owners.
Thanks, Ron. I know we want to try to get through some of these other slides, so we're already at 10:50, just so you're aware.
All right. Well, we're going to kind of keep going here. Okay. So the under $500,000 market, as you see, in all 3 counties, you know, sales are down there, whereas you know, inventory is still coming down, and median price though, and all these other than Palm Beach are still increasing. And then in the under $500,000 condo market, similar to what we just saw in the single family. Yeah, I'm gonna breeze on through these here. 500,000 to, you know, $1 million. You see a lot of green up at the top there. Inventory is increasing, sales are increasing. As inventory starts increasing, we're going to see sales start increasing too, because we have so many buyers on the sidelines wanting to buy. They just don't have the opportunity. Okay, this is 500,000 to $1 million for condominiums. Again, a lot of increases in inventory there. Median price, though, start to see now, and this even in 500,000 to $1 million, median price has actually dropped a little bit, 2% in Dade County, dropped 4% in Palm Beach, 3% in Broward. This is kind of what we need to focus on. This graph right here is really what is developing, where inventory is growing, sales are growing, but the median price is starting to come down. This is why I think if I owned, a home or a condo in the higher prices, now's the time to put your property on the market. I think a lot of people have held it off the market because they think, well, it's just going to get higher and higher. But I think at some point we won't see higher prices as we're beginning to see here, actually lower prices. And then the $1 million to $2 million, you see everything is up there, including months of supply. And then this is $1 million to $2 million condos. And the supply there is increasing quite a bit, 28% in Dade County. We're up to 15.8 months. Again, 12 to 18 months is what we feel comfortable with. But then you look at in Broward County, you have 13 months. And in Palm Beach County, it's just the same as it's been for the last year. And then 2 million to 3 million. Looking specifically at the months of supply, 11 months of supply in Dade County, 9.9 months in Broward, 10.8 months in Palm Beach. And then it's starting to get a little higher, 2 million to 3 million in Dade County. The months of supply is 17 months. Broward County, 13.4 months. Palm Beach, 8 months. And then in the $3 million to $5 million single family market, 13 months, 18 months, 15 months. And now at 3 million to 5 million in condos, 23 months. So we have 2 years of supply now in condos in Dade County. And we know we have a lot of pre-construction condos that aren't even in these MLS numbers. So this is where I would start watching if I was a seller anticipating selling my condo at some point in the future. This, I believe, is the time to put it on the market. 23 months of supply in Dade County, 18 months in Broward County, 17 months in Palm Beach County. Now, this is a 5 million to 10 million single family, 26 months of supply in Dade County, 20 months in Broward County, 19 months in Palm Beach County. So now 12 to 18 months in the over $1 million market is what we feel comfortable with after watching this for a lot of years. And then in the 5 million to 10 million, 47 months. So from 5 to 10 million condominiums, Dade County, we already have 4 years supply. We have 300 units on the market. We're selling an average of 20 a quarter, which is really only like 7 a month. And we have 300 to choose from in this $5 to $10 million market. $10 million and over market, 54 months, 236 units on the market. We basically are selling 13 a quarter. Which divided by 3 months would be about 4 a month. So, when you're a seller, one of 236 sellers in Dade County this morning that have a condo on the market priced over $10 million, and we know that we're only selling about 4 a month. I mean, you want to have your price right, you want to have everything right. But that is something we need to watch. 54 months of supply is a lot of supply, 4.5 years of supply. In Broward County, 75 months, and in Palm Beach County, 49 months. So again, these graphs, of all the graphs we've looked at, when you start getting into these higher price ranges, is where we need to focus. Okay, this is a $10 million and higher condos, 134 on the market. We're selling about 3 a month, and we have 40 months of supply. And then in Broward County, we really just don't have a lot of high end 10 million plus condos. We only have 8 on the market, and there's no sales. And in Broward County and in Palm Beach County, you have 38 on the market, about 28 months of supply. They're selling about 1 a month. So it's those are that market is very, very thin. in all of our markets, but Dade County obviously has more of that $10 million plus market. Okay, market insight, December. This is a great graph to send to your customers or to your whole sphere of influence, because it kind of gives everything all in one glance. So you look at Miami-Dade single family homes and condos combined. So what we just went through was a lot more detail. This is something for somebody who's just casually thinking about selling or buying, and they can see, okay, in Dade County right now, if you add up the condos and the single family homes, 12,000 on the market, that works out to be about 4,000 single family homes and about 8,000 condos. We're selling 1,771 a month. The current, versus, I mean, the inventory is up about 1.9%. The sales are up about 2%. The months of supply here with everything combined, and again, this is a broad brush, so you need to go deeper than this when you're actually doing a market analysis. But 6.9 months of supply, 54 days on the market, median price is $515,000. This is single family and condos combined. All prices, Broward County, same kind of glance, 9,900 on the market. In Palm Beach, 9,300 on the market. And then you start now by neighborhood. Aventura, 814 on the market. We're closing about 81 a month. We've got 10 months of inventory. Brickell, 9 months of inventory. Coconut Grove, 7 months of inventory. Coral Gables, 5.5 months of inventory. Cutler Bay, 5.1 months. Doral, 5.3. Key Biscayne, 9.1. Look at me. Key Biscayne's median price is now $2 million. Miami Beach, 11. Almost 12 months. Palmetto Bay, 4.6 months. Palmetto Bay is amazing. I mean, they're $1 million. They're really competing now nicely with Pinecrest. Their prices are not as high as Pinecrest, but certainly many, many more homes in the $2 million range in Palmetto Bay now than we've ever had. Pinecrest, obviously very solid. About 60% of all the homes in Pinecrest are now over $2 million. And South Miami, 8 months of supply, 865,000. And then Weston, again, only 3 months of supply. So a lot of people still love the western side of Broward County. The developments that are out there were built as luxury to start, and some wonderful communities out there. Okay, that's it. Sherry, you had some other questions?
Yes, I do have some questions. One was really getting into in quite a bit of detail about affordability, but where it really was centered in on taxes, and when somebody sells their home and how they assess value changes, and then we see an increase. I know we talk a lot about income tax savings, but the concern there was, especially for younger generations being able to buy in our market. And we're seeing how, perhaps if you had any comments about taxes being another component, when we already, we touched on insurance, but that was something that came in,
Well,
it's going to create a problem at some point.
Well, the nice thing about taxes is that we have a limitation of 3% per year. So, we know that, if anybody's lived in their home for the last even 5 years, you have significant savings about the 3% cap every year. And I think that that's what young buyers, older buyers, everybody should be looking at, because you can, we have portability. So if you decide you want to move, you can move $500,000 of that savings somewhere else. But I think when I really look at the real value of a young couple, especially, or a young single person buying a property, earlier in their career, the value that the house or the condo gains gives them so much more leverage 5 years later, 10 years later. I mean, just think if you had bought a home 5 years ago, and we've seen a 60% increase even in the last 3 years, you have multiplied your money, your savings, by 60%. So if you bought a home for $500,000 or a condo, and then you have a 60% increase on a $500,000 condo, I mean, 60% of 500 is $300,000. So it's very difficult to save that kind of money just by working on a salary. But when you have your home also working for you, it gives you a lot of leverage then to do something greater down the road.
Okay, well, another question came in about this being an election year. And
Yes.
if you think this is going to have an impact on sales, and if so, is it going to be positive? Is it going to be negative? So,
Well, everybody talks about that. This election year is going to be, I think, an election like none of us have ever seen. So I don't know whether, I don't know if anybody can answer that question exactly. But the thing I do know is that all the stars have been lining up these last 2 years. Inflation was the biggest threat that we had. And it appears that the Fed has figured out how to do that. It was painful when we started seeing the Fed rate rising, every month almost. But now that the Fed seems to say that they are looking at maybe some further reductions next year, that has given the financial markets, everybody, a more, I guess, a better feeling about where we're headed. Stock market hit its highest ever this week at 38,000. I don't know what it's doing today, but I think that the financial markets seem strong, real estate markets seem strong. The inflation now does seem to be in check, trying to get back into that, 2%, 2.5% inflation range versus the fear we had of, 8 or 9%. And of course, we see what inflation is doing to other countries around the world that are certainly not as sophisticated as the US, but, inflation can eat away a lot of good work that people have done. But fortunately, I think our Fed leaders have done a good job of doing this. I mean, no one wants to see rates go up. We probably should have never been down to the 3% range, but COVID created that. I mean, had the Fed not reduced the rates to those low rates, then we would have had many people out of work, and that would have been more disastrous. So I feel pretty confident about all the positive signs that we have, from interest rates to, I mean, politics is what we started talking about here, but I think that fortunately we're still a very democratic, I mean, our democracy works, whether it's Democrats or Republicans, they both have good ideas. We all want them to work closer together, but I don't really see the election having a lot of impact on the positives that are already in play.
okay. Well, another good question was asking if you've seen a shift in cash versus financing over this last year, and if we're seeing
Yes.
more or less of one or the other.
Yes, yeah, we definitely, well, we've always had a lot of cash buyers here, but we've had more cash buyers this past couple of years because people just, even if they, would normally get a mortgage, if they had the cash, they went ahead and closed for cash, but thinking that they would then finance it later when the rates drop. And of course, that's another good comment for us to give to our buyers to say, and it's true. I mean, as soon as the rates drop, I mean, people will all refinance. And so that's an easy way of saying, okay, I'm going to get into this property while the property goes up in value. Yes, I'm going to be paying a higher mortgage payment, but then when the rates come down, I can change my payment, but my house will continue to be worth more. So I think that most people understand that now. The biggest challenge today is just getting ownership. If you have ownership, then you're in the game. And I moved to Miami in 1975. I could have bought pretty much anything on Brickell for like a one-bedroom apartment on Brickell was $65,000. And same thing for single-family homes in Coral Gables, a little small single-family home, 1,500 square feet on a 5,000 square foot lot. I could have bought any of those for $65,000 to $75,000. And now we're selling that same home for $1.2 million or more. So that's just what has happened historically, and I think that it will continue to. I mean, we are the place on the globe where everybody wants to come. I mean, we're selling homes to people now from places I've never heard of. We have the largest consulate. I mean, we're the third largest consulate in the country now. We have 80 different consulates here in Miami today, which speaks volumes again about the interest that the internationals have to have a presence here. I remember when the Iron Curtain fell several years ago, the first place that Hungary opened a consul after they were a free country was Coral Gables. And so we asked them, why did you choose Coral Gables? Why didn't you go to New York or go to Washington, D.C.? And they said, because we already have a Hungarian social club in Miami with 1,200 members. So we don't have really a full appreciation for how lucky we are to be probably in the most diverse place on earth. when you look at the fact that our company speaks 27 languages, I mean, thank you all, because I mean, we all have learned to enjoy the company of people from all over the world, which wasn't always the case for Miami. You go back into the early 80s when we had riots and we had a lot of problems, but now today everybody sees Miami as a place where they want to be. And of course, the last piece of the puzzle was the corporate piece, because you need to have good jobs, higher paying jobs, and now we have those, and those are growing rapidly. I mean, our company was a founding member of the Beacon Council and the Economic Development Agency in Miami, and the things that are coming out of there now are just staggering, with these new jobs that are coming with average salaries, and not huge numbers of companies, but I mean 15 people will be coming in, but they're all making $1 million each a year. So it's exciting to be a part of that. It's stressful some days because we have to live with all the changes in the roads, and the new I-395 bridge is going to be gorgeous, but it's going to take another 4 years to complete, or 3.5 years, I guess, to complete. 2027 is what they're estimating, end of 27. So we'll have to live with traffic, worse traffic for a while, but everybody wants to be here, and I think that will not slow up.
Knowing that we kind of want to wrap things up here, because we're after 11 now. Just as we kind of look at our final time, do you see a forecast for foreclosures? And then I guess tied in with that is, as we look to 2024, are there any key bullet takeaways for the people on the call today?
Yeah, well, I don't see foreclosures. Most of the, I mean, still, almost 40-something% of their sales are cash. So those people don't have a mortgage, so no one's going to be foreclosing on them. And the mortgages that we do have is probably the most solid portfolio of mortgages that's been written in decades here. After the recession back in 07, 8, 9, that period, the conditions on a mortgage were much stricter. And I think that the mortgages that are out there, yes, there will be always some foreclosures, but I don't see mass foreclosures, because the values will have increased enough to take a borrower out of a foreclosure situation. Obviously, everybody has to be prudent in the way they handle their finances. So we have seen situations where people still face a foreclosure, even though if they would work with us, we could help them get their home sold, and they would still have cash coming out of their home, versus waiting too long until accelerated interest rates or interest cost and legal fees and all kind of eat things away. So if people are in a financial situation themselves, then they should talk with us about the value of their property. And we have a lot of buyers. We have more buyers today than we have sellers. That's the challenge, and that will continue to push values or push our values up. I do think our values, as you saw in those two graphs we spent quite a bit of time on, the prices have kind of leveled off a little bit, but with choice properties, and when as I look at the difference that a home that's been prepared for selling, the price it gets versus ones that haven't been prepared for selling, is dramatic. I mean, if you say, well, the seller says, well, the buyer can just take care of those things, I'll give them a credit at closing, but you never get the same amount of price as if you had done it yourself. If you do the painting, you do the landscaping, you do the repairs, you fix the air conditioner or whatever, roofs, I mean, all those things, we're much, the seller is going to benefit much more to go ahead and do those up front, rather than having all that come out in an inspection and then having the buyers say, well, I don't really want to do all this, I'll just find another house. So I can't stress enough how important it is to prepare your house for selling.
Well, when you talk about buyers, I mean, Miami's a big market for investors. So as you look at 2024, is there a particular type of property that we may be attracting more buyers for, or where's the best investment? Multifamily, condos, single family, commercial? Do you have any thoughts on that?
Well, it also, you have to ask the appetite of the owner to be a landlord. Some people just don't want to do that. We have the new Elser Hotel and Residences downtown. That's a Airbnb. It's designed for Airbnb. So if you want to invest in something like that, then you have no responsibility much to manage. Somebody else is doing that for you, but your returns are going to be lower. To me, still a single family home is probably the best place to invest, but it takes more maintenance. It takes more attention. But we don't have enough of that generally. Rents have been softening a little bit in the multifamily area because we have been growing our inventory a lot. The large apartment owners have built thousands of units and continue to do that. They're not starting as many today as they had been starting, but I think that in answer to your question again, probably in order of preference, single family, a little bit more sophisticated investor might want to look at some of our commercial opportunities. People have been buying warehouses and a lot of different things over these last 5 or 6 years. So everything has gone up in value. There's a concern about office buildings across the nation, but Miami seems to be still attracting enough new office users, to backfill our office space. But offices are still kind of an uncertainty across the country because people are working still from home more. But there is a trend of people wanting to go back to the office more. So I think in our market, population is what drives everything. And when we have 1,000 people a day moving to the state, Dade, Broward, and Palm Beach represent about 30% of the state's population. So, if the same proportions hold true, I mean, out of those 1,000 people, I mean, you could have about 300 of them coming just to these 3 counties every day. And so if you think, well, you have a lot more single people with single housing units. So instead of, 2 people living in a home, maybe, every home only has 1.5 people. So we need to be delivering a lot of new housing every day. Now, everyone cannot afford, $1 million condo. And I think that's where we'll all be challenged. But then, we have some new rules that, the new laws that our state legislature has encouraged developers to build more housing for more modest incomes. So if those can really work, then that will provide more opportunities for more people to have housing that's not miles away from where they work.
Well, thank you, Ron. I know how much time and effort it takes into preparing all this. I know our marketing team was great in helping with the visuals. I know we promised we'll get this recording back out to everyone along with some of these key slides and your presentation. We'll be hosting it on EWM.com too, so we'll include all that information. I think what I'm walking away with is appreciating that our outlook for 2024 is a really positive one, and there's lots for us, as you talk about all the time. Miami is the place to be. So thank everyone for being on the call today.
Well, no, thank you, Sherry. It makes it much easier when you can field all the questions, and thank all of you associates. I mean, Sherry and I wouldn't have a job if it were not for you guys. But I think we're all going to be pleasantly surprised at how the year unfolds. I tell everybody, though, it takes work. I mean, you've got to show up. And, I often say, that very little happens among people who don't know each other. So, the more friends you have, the more people that know that you're in this business, it helps you, obviously, but it also helps them to find somebody that's really trustworthy, working with, obviously, a company that can give them tons of support and information to help them to make the best decision that they can. And I think that it's just we just have to show up. So hopefully you're doing that already. But I think there are listing opportunities out there right now. Of course, buyers are all wanting something that's not on the market. But I think that if we continue to talk with our friends who have properties on the market, like that graph I showed a minute ago, many people have multiple properties. And if we can just get somebody who owns 4 properties to sell one of them, then we'll have plenty of inventory for the whole country. But it's going to be a fun year, and we're going to be here with you together doing this, and just look forward to these months ahead.
Great. And thanks everyone for showing up today. We really appreciate it. Have a wonderful one, and we'll connect up again soon.
Okay. Thanks, Sherry. Thanks, everybody. See ya. Bye-bye.